Hello, listeners. Welcome to the Pre-Market Update. The podcast is powered by AI. I'm Joe.
And I'm Sarah. Today is March 2nd, 2026. Let's dive in.
Market overview. It is looking like a very difficult Monday morning for the Indian markets. If you're looking at the screens right now, the primary sentiment is one of caution and defensive positioning. The GIFT Nifty is currently signaling a significant gap down start, trading around the 25,230 level. That's a discount of nearly 108 points from the Nifty Futures' previous close. We expect the Sensex and Nifty 50 to open deep in the red as the geopolitical situation in the Middle East has taken a turn for the worse following U.S. and Israeli strikes on Iran. Looking at the Nifty 50 heavyweights, we're likely to see immediate pressure on the high beta stocks and banking majors like HDFC Bank and ICICI Bank. In the FNO segment, the cues are clearly leaning toward a risk-off environment. Traders are unwinding long positions and rushing into hedges. We're seeing a spike in the India VIX, or the fear gauge, which suggests that volatility will be the name of the game today. Sectorally, while energy and defense might see some contrarian buying, the broader indices are braced for a sea of red as the Operation Epic Fury headlines continue to cross the wires.
International markets. Joe, the story is the same globally. Investors are running for cover. Over in the U.S., the Nasdaq and S&P 500 futures have declined sharply as the reality of the Middle East escalation sinks in. Traders are essentially trimming risk across the board. In Asia, the Nikkei has been sliding as caution hits sentiment, although we are seeing some refiners in Japan gain because of the spike in crude. The MSCI's broadest index of Asia-Pacific shares outside Japan has already fallen 1.2%. The real action, however, is in commodities and currencies. Oil futures have surged by the most in 4 years. Brent crude jumped by as much as 13% at the open, hitting levels above $82 a barrel, while WTI is trading around $72.50. This is largely due to the effective closure of the Strait of Hormuz, a critical transit route for 20% of global supply. In the currency markets, we're seeing a flight to safety. The US dollar and gold are climbing, with gold rising for a fourth consecutive day. On the flip side, emerging market currencies like the Indonesian rupiah are under such pressure that their central banks are already intervening. The Indian rupee is likely to face a similar headwind today as the oil surge threatens our current account deficit.
Business story. India. Turning to corporate India, the surge in oil is going to be the dominant narrative for our Nifty 50 companies today. First, keep a close eye on the aviation, paint, and tire sectors. Companies like Interglobe Aviation, which operates Indigo, Asian Paints, and MRF are expected to come under heavy selling pressure. When crude spikes, their input costs skyrocket, and margins get squeezed almost instantly. Secondly, let's talk about the energy giants. Reliance Industries and ONGC will be in focus, but for different reasons. While ONGC might benefit from higher realization on crude, the broader market volatility often pulls even the giants down. Third, the specialty chemical space is another area of concern, as many of their raw materials are oil derivatives. On a more positive note, defense-related stocks and perhaps some energy-focused PSU stocks might act as a temporary haven. Finally, the IT sector, TCS, Infosys, and Wipro will be watched to see if they can provide any stability, though a global risk-off mood usually doesn't spare the tech majors as investors move to cash.
Business story. International. On the international front, the business landscape is shifting rapidly to accommodate this new war footing. In Australia, LNG exporters like Santos and Woodside saw their shares jump because the closure of the Strait of Hormuz has hampered global supply, making Australian gas much more valuable. Meanwhile, the airline industry globally is taking a massive hit. From Delta in the US to Lufthansa in Europe, the combination of rising fuel costs and restricted airspace is a double whammy for the sector. In the financial world, we're seeing a massive trend that analysts are calling the overlay everything trade. Retail investors are rushing into options-based ETFs that offer downside protection and income in these volatile times. Also, in corporate moves, Société Générale has appointed Selena Chung from UBS to lead its Asia-Pacific equity capital markets. It's an interesting time to take the helm, as she will be advising on share sales right when the market for new listings might be cooling off due to geopolitical uncertainty. Lastly, keep an eye on Japanese refiners and global defense contractors like Lockheed Martin, as they are among the few sectors currently trading in the green.
Economics and geopolitics. The big picture here is all about the Strait of Hormuz and the potential for a 1970-style energy shock. Economists are frantically modeling the impact of this U.S.-Israel-Iran conflict, and the initial consensus is that it could reignite global inflation just as central banks were thinking about cutting rates. The RBI was already in a wait-and-watch mode, but this oil spike complicates things significantly for Governor Shakti Kanadas. High oil prices are a direct threat to India's fiscal math. Over in the U.S., there are some conflicting signals. While the strikes were severe, there are reports of President Trump talking about potentially easing some sanctions on Iran to stabilize the market. This helped markets pare some of their absolute worst losses earlier this morning. Additionally, we need to watch China this week. They are launching a pivotal 5-year plan that targets fixes to their commodity supply chains. If China starts aggressive stockpiling in response to this war, it could put an even higher floor under global commodity prices.
Key takeaways. To wrap things up for our investors today, here are the 4 key points to remember. First, expect a sharp negative start for the Nifty and Sensex. The gift Nifty isn't lying, and the sentiment is fragile. Second, oil is the North Star for this week. If Brent stays above $80, expect sustained pressure on Indian paints, tires, and aviation stocks. Third, look for safe havens. Gold and the US dollar are the current favorites, while defense and certain energy stocks might provide a buffer in your equity portfolio. Finally, keep an eye on the Hormuz headlines. Any news of the strait reopening could lead to a relief rally, but until then, the risk-off trade is firmly in the driver's seat.
That wraps from today's update. I hope you gained useful insights into how to navigate this volatile opening.
Add your thoughts in the comments and follow for more such updates. This is Sarah
And Joe signing off. Stay safe and trade smart.